Hey everybody, it's Ed Zoller with Villa Realty Group with your end of March, maybe end of season real estate market update for Southwest Florida. For those of you who do not know me, I've been doing this over 25 years. I used to track the market back in 2002 all the way up until current. And this is just another update for you guys so you guys can get in tune with what's going on with the market. So let's get on with this end of season kind of update. So we always go first with supply. We're going to go over supply and demand. And as you can see here, supply always tends to go up starting in September. We start building our inventory for season. It peaks out in March and then it goes back down on September. The purple little graphs there are September. You can see the tip of the arrow is always at the bottom. And then these are equal arrows to say, this is how long season goes. It goes up to the pink, which is March. Obviously, with COVID, we didn't gain anything at all. We just kept losing inventory. And every time I highlight it in pink, that's March. But as you can see here, March, we're starting to show maybe a little bit of sloughing off, but we still did gain inventory. We're over 14,100 now of everything you can buy in Southwest Florida. That's quite a bit when you look at the long-term average of what's been for sale. And as you can see here, inventory should start going down now because every time it's reached its peak, it's gone down in March, except for COVID. It was always going up. But we'll see what happens with this one. So yeah, supply surplus of homes. If you look at the long-term average, we're still well over 200% more than houses than what we need. Seeing this going up. Normally in March, it starts peaking and starts going down. So we will have to see what happens next month. Very important to look at this. If we gain more inventory, and that'd be the first April, and I don't even know if it ever happened since I've been more tracking the market, that we gain inventory. That'll be something. That'll be a first, and that probably be really good for buyers and bad news for sellers out there. So at least it's showing not this steep increase. It's a little bit of leveling up, but we did gain more inventory. More inventory, more competition is better deals for buyers. Of this stuff that is inventory, about 61% is single-family homes, 26% are condos, and the rest of them are villas and townhomes. Multifamily, yet single-family zoned. And then of builders, the inventory right now is about 15%. But when you look at the sales, that's a different picture. I drew this trend line, and I also highlighted what happens to demand in March. It tends to hit a peak. Now, this year, 2022, April was better than the March, and this as well, April was better than March. But this April was finally, it was going down. March was the peak. As you can see, we didn't even get to long-term average. This is supposed to be the busiest month. Every year, we've always exceeded it, including last year, barely. And this year, barely got anywhere close to it. Although it did go up. I mean, sales went up 34%. You're going to see news that says, "Oh my God, the market's back. People are coming out of, kicking over fences, and they're coming out of their caves." But you got to remember, up 34% sounds real impressive, but we just came off of a 40-year low in January. So something to consider when you see articles, you got to look at the source, you got to figure out what they're trying to accomplish, what is their message. And I always say data doesn't have a message. This is a pretty weak March. We should at least have hit average or close to it. We didn't even get to this downward trend line. So if this is truly our end of season and it starts going down from here, that means the buyers have all but disappeared. It's been making new 40-year lows. But looking at it, I really think builders are not going to let that happen. I do think we're going to have a good April and maybe possibly hit this trend line. It'd be great if we can hit long-term average of 1,700 sales. I doubt it, but at least higher up. We might get another month out of this season just yet. Of the 1,199 sales in March, 406 of them were new constructions. So isn't that funny? 15% of inventory is a third of our sales. So actually, it's a little less than 15%, 14 and change. That's something to consider, that buyers are going after new constructions, and we're going to go over why it is a better idea right now to do that, especially with how panicked the sellers are. But overall demand, not so good. Average price went down as you would expect it to, but it has not followed the right rules. We had poor demand and increasing supply, and we'd see little average price go up. This is the problem with averages and medians. Medians are one thing, averages are another thing, but I stay consistent with all my graphs so you can see how this transpires. This pink bottom line is kind of like long-term average, but you can see here this little steady, this trend, this little increase in the slope here. This is what a normal market looks like. When it over exceeds, like in 2006, it tends to overcorrect itself, get back on track, like in 2014, or when I said it stabilized in 2012. And this isn't outrageous. This is like 5% to 7% appreciation over and over and over again. You can see here in 2017, it kind of, it went not as steep, but interest rates were really low and the prices were starting to creep up. But then COVID happened, 2020, 2021, and kaboom. I mean, if that's a bubble, what's that? That's a bigger bubble. And now the prices are coming back down to it. Do I think that the market's going to come all the way back down to this pink line? I don't think so. But I think this line should have probably been somewhere between the 250 to $300,000 mark. So I do see that the prices are probably going to come back down, probably another 100 grand until we can get into that range here. But prices, builders have been keeping prices high, and now they're not. Now they're finally giving on the price and still offering incentives, making new construction kind of a better potential. The home payment, this is really about affordability. Are we sustainable? So this takes the median household income of Lee County, which went up by $52. They do track this. Census does track this every single month, and I can look up to see what people are making. You multiply by long-term average, about 27.5% of what people can afford, and you can see here that most of the time, all the way from 2009 all the way to 2022, people don't even pay 27%. They pay 21 to 22, maybe 23, 24, and then even at 20, almost 25, it kind of plummeted back down again. But anytime it's above that, especially when you just came off of 40 percenters, 40% of your gross income going to a mortgage or rent. Can't afford that. It's not sustainable. So this graph needs to come back down. This month it did go down, but it's still in the 39s. We need to see this thing kind of come down to 27. So if people ask me, is it affordable? Nope. When it gets to this line, then I would say it's starting to become affordable. But based on this Lee County, the average household income, that tells me that, mortgages should be around $1,600. And remember, this isn't all about price. This is principal, price, interest, taxes, and insurance. But taxes aren't going to go down until next year. Insurance isn't going to go down until Hurricane Ian, Helene, and Milton are a thing of the past. And interest rates aren't going to go down. They're saying in September. It might not even happen in September. So maybe twice this year, but toward the end of the year. So it's not going to happen anytime this summer. So therefore, all of this pressure is all on price right now. And so kind of want to see that price catch this up so we can say that we have affordable living again, so we don't lose people. As far as us stabilizing, and this is a graph I've been using for years, when it crosses over the center line on the downward market, obviously we know 2007, 7 and 8, houses were losing their value. The Zillow Home Index, people were losing anywhere from 1.5% to 2.5% per month on their value of their home. So 2% times 12 is 24% that year. And then it came back up, and when it stabilized, and it kind of tested that center line a couple times, started going up and down. But I always said right here is kind of where I told people we have stopped going down in price, and it looks like we're forming a stable type of market. That was 2012. Was I right? Yeah. We hit a bottom. We never really went under that price at that point. Price stayed the same. Interest rates were starting to go down. Things were getting more affordable. The price did soar well beyond where it should have gone. And then over the time since that 2012 to all the way to COVID, it was just kind of steadily getting back towards that zero, touching it a couple times. And then COVID happened, and then kaboosh, 3%. That month, right there on that graph, that meant that Lee County real estate went up 3.2% that month alone. Did it stay there? No, but it still stayed well above 2% every single month. That's when we went up 36%. Was that normal? No. These little peaks here, it's starting to come back down. And then where we are right now, it is on a downward trend. We're getting further from this line. So are we stable? Have we hit a bottom? Does it look like there's any kind of reversals that's going to happen with our market? Nope, 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 nope. All of them, no. We are at now 20 consecutive months. I started doing these updates when I said one consecutive month of negative home growth back in 2022. And now we're at 20 consecutive months, or 2023 maybe. 20 consecutive months of negative home value growth. The last time we did this here in 2006, we went 59 consecutive months. We're going to almost hit here in 10 more months. If this continues like this, we're going to hit the halfway mark of the last crash. So let's just go over statistics. The housing units for sale only went up 1%. That's kind of normal. I'm expecting March to peak out and then start going back down. It went up like 6% the previous month. So then it going up only 1, maybe that is the stall that we're looking for so that no more inventory hits the market. But 14,000 is still a lot. Our sold homes went up 34%. Again, that is if you just look at 1 month and say, oh my God, look at that. And pending sales going up 6, where the previous month they went up 40%. Here's the funny thing. If you look at what went pending, 1,900 homes equal 1,200 sales. And I've been doing this with every single month going back and forth. So therefore, a slightly increased pending sales means that maybe we are going to have a better April where the sales are going to go up. But we didn't get that much more. Even if the sales go up 6%, we're not going to hit long-term average even. We're going to be under that. And we're not even going to hit that trend line that I did. New constructions for sale went down only 1%. And I did look up. If you watched last month's, and I said, oh my God, guys, 2,500 new constructions just became 21. What happened? The builders must have sold a bunch of homes. They didn't. A majority of those homes went terminated, expired, or withdrawn. Just taking them from the market doesn't mean they sold. They just took them from the market because having 2,500 homes is no different to the builder than having 2,100 homes to sell. So just inventory that's not moving, better just to take off the market and not flood the market. It's one way to do it. It's not the accurate way, in my opinion. The average time on market stayed the same. Our asking price and our median selling price did go down significantly, 6 and 5%. And then the percent asking prices sold. For you sellers out there, know that if you see an active and let's say it's priced correctly with the market, then they're probably going to take 4% less than that. So that's just looking at this. This kind of paints a picture of seasons here. How long season's going to last. It could go into April, but historically, it's always tend to fail. It's failed every single May, going all the way back a decade. So that's probably what's going to happen as well. Obviously, our buyer's market, because our pendings went up and our sales went up and our inventory only went up a little bit, we actually have less months of inventory. So this is a good trend, but we are still in the super crazy buyer's market. Usually it only hovers right into that under 10-month mark. We're at the 11th month mark now. So at least it's not BOGO buyer's market, but it's funny because this month it was. And I'm going to discuss that in the next couple slides. Now, last month, I also said with price cuts, we at one point led the entire state with 37% right here. And we started going back down to normal. And when we hit that line, I'm like, hey, at least price cuts aren't as fast and furious as it was before. And I said, but I'm curious if the record for price cuts that was taken back into 2016, if we're going to exceed that, and we did by 0.7. We exceeded, we now set a record set back in 2016. We have 38.7%, more than a third of every listing out there is doing price cuts, which means panic sellers. So you have little buyers, you've been sitting back and waiting, and your patience is starting to pay off because you're seeing these price drops continuously now through all these 14,000 sellers that are out there. So what I want to talk about this month is what is happening currently and what I am seeing. So this thing is about what builders are doing. And there was an article that talked about builders collapsing the market in Florida with their massive price drops. This is from Fred. So kind of like the census data is showing these are completed homes ever since 1999. That just doesn't mean you're seeing the sticks and the roof and you see the trucks and the workers. These are completed, CO'd, it's called, certificate of occupancy. It is just sitting on a builder lot. And you can see here, we just hit a number we haven't seen since 2009 on the uptrend of over 120,000 inventory homes by these builders. Builders want to sell the home and close on it at the day of conception of certificate of occupancy. They don't want to hold it. They really don't, it doesn't do well for their stock. Their inventory starts going up. They really don't want that home. They call them green check houses. They don't want them. They want to get rid of them as fast as possible. And they're doing everything they can to do that. So builders are sitting with a lot of homes right now, and going on the uptrend. Will we go to almost to that 180,000? Who knows? But I do know they are building a ton of homes. And that's this next graph here, going all the way back to 1973. This line was the peak. That was the record set in 2006. They had in the southern states, just the southern states alone, builders were building or had already built and not sold close to 300,000. It was like 278,000 homes. We just went over the $300,000 mark into 302,000 homes. And this isn't a good thing for builders. They do not want inventory, and it reflects on their stock market. I just went to the top builders. Just look at go to the ticker numbers or go on Wall Street and look at their stock prices. In the last 6 months, Lennar, the second biggest builder in the country, stock is down 35%. KB Home stock's down 29%. Pulte's down 25%. Horton's down 30%. This is not the forward projections for these builders. They can't just stop building, though. If they stop building, that stock's going to tank even more because that's not forward looking at all. So they have to keep building. They just have to build that house less expensive. They are tightening up the lot purchases, which is going to come and collapse the lot market, which is what they want and need, is cheaper land, cheaper development costs, cheaper labor, and cheaper materials. And so until that happens, these inventory homes that they have, they probably paid a premium because that was during COVID when labor was high and materials were high. So they want to get rid of these homes at any cost because it's just only going to keep crumbling their company the more homes they have. They need this number to start going back down again. And at their last peak, it did go down as they kind of stopped construction, but they just can't stop. They have to keep going. And so I pulled up, this is what happens when builders get panicked. And I took 3 homes, right? First home I want to point out here is this. Here's a home that a person purchased in 2022 for $379,000. It's a 1,550 square foot. It was new at the time, so now it's only a less than 3-year-old home. Paid $379,000. He went on the market 2.5 years later, and just really recently, not that long ago, 4 months ago, for $399,900, trying to make a profit. He has dropped it 10 grand. About here is a break-even point because if you take out commissions and dock stamp tax and the deed and title insurance, he's probably breaking even for what he purchased it for. Took another 2 grand off. That was probably his break-even price there. That's why it's a $2,000 price drop. But only about 2 weeks later, almost $20,000 off the price. And still on the market, and then dropped again. So you as a buyer's out there saying, oh my God, 4 months ago, they wanted 400 and they already dropped at least 10% off that home. That should be a good deal, right? Well, this is what the builder just did. Same area, 1,500 square foot home and brand new. After 2 weeks of having it, they've already dropped it $15,000. This is a Lennar built home. But get this, they're also offering those incentives I talked about. 4.99, FHA's at 6.5. You know what it would cost you to do that? About 20 grand. Plus, they're paying all the closing costs. That saves you another 9 grand difference. And the monthly payment, look at the monthly payment difference. To get a brand new home is $650 a month less. For this house to be $2,243 a month, you'd have to drop this house down to $260. Is he going to have any luck selling that home when a builder just did that and got more panicked than him? Go one further. This is a house I personally listed and got my sellers out of this market. This is a 2020 house. It's 5 years old. We sold it for $299. But look at the monthly payment that person got. If they really looked, they could have saved themselves almost $150 a month and saved them $7,000 out of pocket and gotten a brand new home as opposed to a 5-year-old home. So to get this home down to $2,243, I'd have to go down to $269.8. That's, I think, where the used market's heading. It's just not there yet because the memos are just now being read by sellers out there. But this is the impact when a builder does these price drops. It sounds amazing, but what impact does it do? It affects the entire market. Let me go one step further. Let me introduce you to my friend Dave. Dave got me through YouTube, which is what you're watching this on. Gave me a call one day. He loves the data. He's always eager to comment on it and to absorb it. I usually tend to send it to him a little day early or so. But We were trying to buy a home up in Babcock Ranch, which is up in Punta Gorda, Florida. Really nice, premier gated community city, if you want to call it. Tons of different builders are up there. And I wanted to profile this one home. This is a home in 2023 that was on the market for 1.15 million by the builder. Look at here. He bought it and closed on it in June, and the builder terminated the listing. Why would they do that? Because do you think a builder who's trying to sell for $1.1 million wants to see a sale of 890? So that buyer had this great deal at the time in 2023. And what did he do? Well, 2 months later, he put it on the market for $1 million. Hey, let me make some money. I got a good deal. I paid cash. Let me do this. Then had to drop it to 950. And then it expired after 6 months, then put it back on the market a month and a half later so it could reset that days on market. But you and I both know when you see days on market 0, it'll still tell you that it's been on the market prior. 950. Now he's down to 850. He paid 890. Now he's asking 850. And why isn't he selling? Look at that price drop. Well, it's because this sign, that's Dave there. Pulte decided this same house here and the same house here to put a sign in front of their model to say 10 days only, 100 grand off. So we were curious. We went there. And what we did was, because buyers should be patient and you should never feel bad if you're going to offer a builder something. We went in on this house here, this huge monster 3,400 square foot home that you can see with this sign. They already dropped from 691 down to 6.25. They told that we offered them 550, and we wanted their 4.5% interest rate, and we wanted all the closing costs paid. And they came back and said, you can have all of that, but we want 624. So even came another 5 grand off that. We came in super low. They did counter. That seems like a pretty good deal, right? Someone 2 years ago paid 890. And is on the market for 850 as a used home, and you can get a brand new exact same home in the exact same community for 3.25. Sounds great. Did Dave and I take it? No, because I'm going to go one step further than that. We went into a different builder. This builder, different, same Babcock Ranch, different community, and you can see here the last sales of the same home. Kelsa Ann Loop, Kelsa Ann Loop, Kelsa Ann Loop, same exact home, guys. The one with the 2-car garage sold for $685. Then the next one sold for $714, $726, and $730. Look at the date it sold. That's only 3 months ago. Someone paid $730,000. We had patience. We also went to this builder and offered him $550. And we wanted the closing costs, 25 grand. And we wanted the 4.99, which would cost $20,000 to $30,000 for you to do that. And they came back at $580. I think it was 580. And we got 50 grand of incentives, so it's really like 530. So 3 months ago, someone paid 730, and now we just paid $150,000 less having patience and offering this builder. They did not make any money on this. I added up their costs. I don't, and say the land development's free. That price per square foot is well under what I can even think builders can pay for. And this is not some cookie cutter home. This is their big, huge, deck to the hilt, granite and everything else. This is what I'm talking about when I say patience. Buyers out there, you can make your deal happen. You could say, Ed, I want to be in this area, but I too believe the market's going to continue to go down. How much is blankety blank overvalued? And I can tell you, hey, Babcock Punta Gorda is overvalued by 18.9%. Great, I want to take 18.9% off of 730. And we actually saved a little bit more. And with this monthly payment with putting 20% down is less than $3 grand a month. That's principal, interest, taxes, and insurance, all in, less than $3,000 a month because of that interest rate, and also no extra money out of pocket for closing costs. That's how you structure a deal, and that's what buyers should be patient to get. So that's kind of the purpose of this. The overview is this. Guys, March was here. We've been wondering if this was season. Yep, season. It showed itself. The demand went up. The buyers started buying. The inventory should have been starting to level off. It has. March has done everything we thought it was going to. I just thought the sales would be a little bit better than 1,200 sales. I mean, that's like still in the top 10 worst months, and it's definitely the worst March we've ever had. Pending sales going up only 6%. We're not stable. The inventory is still going up. The demand's not quite ever where it's going to be, and now builders are finally catching on to price reductions because of the standing inventory that's just killing them right now, and they got to move them out. So what we really do is this. We find a model and a house and an area that you want. We find the builder that's building in there, and we go to them and we make an offer and see what happens. The worst they can say is no. You didn't change anything with it. But you should be getting, this is a buyer's market where buyers are making the rules, an extreme one at that. So big builders have big discounts, and we want to take advantage of this situation because 2-3 years ago, you had no advantages as being a buyer. The sellers had all the advantages. Obviously, my data that I like to go over with you. And my advice for sellers is season's here and almost over. I mean, even if we get an April out of it, I mean, if you're not even on the market yet, you're going to take a couple weeks to do that. If you ever thought of selling sooner than later, what's going to happen is as the market gets back to affordable and those monthly payments go from $2,300 to $2,200 until they go back to $1,600 for the average home and the average neighborhood, you're going to be losing all that fake equity you gained during COVID, because there's no reason your house went up 34% year over year because of COVID. There was a reason. We all understand that now. If you go back to my previous updates, we know exactly why prices went up. It had nothing to do with income and jobs and people. It had everything to do with panic, fear, and FOMOing. So how I market homes and how I'm getting my listings moved out. I mean, think of the house I just moved out for those people. That house is really a 260 house if you looked at the intrinsic value of it, but we got 300 out of it. Am I going to get could I get 300 now that a builder just dropped from 325, or really from 350 to 325 now to 319 and offering interest rate incentives? There's not a chance. I'd have to drop that home rapidly, and this is what's going to happen to the used market. I always market my homes differently. So if you're a seller out there and thinking of selling in Southwest Florida or have anything from Punta Gorda down, give me a call. We can come up with a plan and see if this is the right time for you. If you feel you're upside down, short sales are now a thing. And actually, matter of fact, the month of March, this is the first. I walked into 5 foreclosures. I haven't walked into one in 17 years for a reason. We didn't have them. Now I just walked into 5. And one actually in Babcock Ranch too. And that one went for $550, and we just got a brand new bigger home that wasn't a foreclosure and trashed. So just kind of think of that for a second. Let that digest. But anyway, sellers out there, that's my advice for you. Get out while the getting's good. Sit back, wait, watch the market, and buy at a discount when it finally bottoms and corrects. And for buyers, patience, and I'm going to say patience to infinity. Wait your time. It's a house of falling daggers. Do not reach. Let it turn to a feather. Fall gracefully in the hand. Just be prepared is all I'm saying. Just be prepared so that when the moment happens, we can make deals happen. You don't have to wait for the market to drop 20%. We can just do it now and give them the option. And believe me, with all the outstanding inventory, they will want that. 14,000 is still a huge pile of homes. If you don't think what you want and if you're not at your price point, don't worry. The market's going to get there pretty quick. And I think that's just about all I have to say about this update. Of course, you can call me with anything at all. Congratulations to Dave and his wife for watching my updates and then actually doing something and being prepared and just being patient. This is the epitome of patience for buyers. And congratulations, that home I just sold. That's Cannon. He just got out of that home, and thank God you did, because I was going to call you if we didn't go under contract and close yesterday. I was probably going to call you to do a price drop down to 275 and 280, and you wouldn't have made any money. You probably would have broke even, and if we didn't get out then you would have been upside down. So anyway, talk to you later, guys. Hope you have a good one. Thanks. Bye.